Hello, and welcome to our channel. If you're worried about a potential recession and wondering how to safeguard your investments, you've come to the right place. Today, we'll explore how to invest smartly before a recession, protecting your wealth and setting yourself up for long-term growth. Let's dive in. Understanding recessions. First, let's quickly discuss what a recession is. A recession is a period of economic decline, typically marked by reduced consumer spending, lower corporate profits, and rising unemployment. This environment creates challenges for investors, but with the right strategies, you can still build and protect your wealth. Preparing for a recession isn't about panic, it's about strategic planning. Focus on safe haven assets. One common strategy during uncertain times is to turn to safe haven assets. Assets like gold, government bonds, and treasury securities tend to retain or even increase in value during economic downturns. These assets are less likely to be impacted by stock market volatility, making them reliable options to preserve your capital. Consider allocating a portion of your portfolio to these safer choices as a buffer against potential losses in riskier markets. Diversify your portfolio. Diversification is key to any recession-resistant portfolio. When you spread your investments across different asset classes, such as stocks, bonds, real estate, and commodities, you reduce your exposure to one particular asset's decline. For instance, if stock values fall, real estate or commodities may still hold steady or even gain value. This balance helps cushion your portfolio against downturns and enhances long-term growth prospects. Invest in recession-proof stocks. While some stocks lose value during a recession, others can remain stable or even grow. Known as recession-proof stocks, these typically include companies in sectors like utilities, healthcare, and consumer staples. People still need essentials like electricity, medicine, and groceries, no matter the economic climate. By investing in these types of companies, you create a foundation of stability in your portfolio. Consider dividend stocks. Dividend stocks are another solid choice before a recession. Companies that consistently pay dividends often have strong financials and a history of profitability. During recessions, these dividends provide investors with regular income, helping offset potential capital losses. Look for high-quality, dividend-paying stocks with a stable track record. Build an emergency fund. In addition to investments, building an emergency fund is essential. Cash reserves allow you to cover unexpected expenses without having to sell off investments at a loss. Aim to have at least 6 months' worth of living expenses saved, providing financial flexibility and peace of mind during any economic downturn. Take advantage of dollar-cost averaging. Finally, consider dollar-cost averaging as a way to manage market volatility. By investing a fixed amount regularly, you buy more shares when prices are low and fewer when they are high. This strategy smooths out the cost of investing and takes advantage of potential market rebounds over time. Thank you for watching.